Prasarana Malaysia Non-Executive Chairman Datuk Sri Tajuddin Abdul Rahman claims that the company has paid RM3.47 billion to MRCB-George Kent up to October 2nd, 2020. The chairman's claim came a few days after news reports indicated that 17 contractors and consulting firms for the LRT3 project jointly wrote a letter to Prime Minister Tan Sri Muhyiddin Yassin, the Ministry of Finance and Ministry of Transport to seek help for payment of more than 700 million ringgit allegedly withheld by Prasarana for work done. According to the jointly signed letter, the 17 firms said Prasarana had not paid them since July. As of October, the contractors were owed 700 million ringgit, and after taking into account work done in December, they said this amount would exceed 1 billion ringgit. Speaking at a press conference today, Tajuddin said Prasarana did not withhold any payment to MRCB-George Kent, and that the subcontractors should take it up with the consortium instead. He also highlighted that MRCB-George Kent, being owned by listed companies, should have capital to proceed with the project and pay for the works done by the subcontractors. Tajuddin's press conference was called just hours after the MACC raided Prasarana's premises. However, the company's Deputy Chief Communication Officer Rafizah Amran denied it was a raid, saying that the anti-graft officers were there on a fact-finding mission, following a slew of negative reports in the media. Four individuals, including two directors of frozen meat import companies, have been remanded for 4 days from today by the Magistrates Court in Johor Bahru. According to Bernama Newswire, the four comprise a director, a managing director and a clerk of one company and a director of another firm. They were arrested at the Johor MACC office last night on suspicion of being involved in corrupt activities regarding the smuggling of frozen meat. The remand order will allow more time for the MACC to probe the case under Section 17B of the MACC Act 2009. Allegations of a decades-old fake halal meat syndicate surfaced late last year following news reports that said frozen imported meat that did not have JAKIM's certification was being smuggled into the country with inside help. The cartel is said to have sourced the frozen meats from countries including China and Ukraine, repackaged the products with fake halal logos, and then distributed them for sale across the country. Last Wednesday, two directors of meat supplier Raihana Cold Storage were charged with using uncertified halal logos on its transport lorries. Glove Corp says it has committed to a special dividend of 20% on top of its existing dividend policy of a 50% payout ratio on profit after tax and minority interests for the second quarter to fourth quarter of FY21. It said in a filing with Bursa Malaysia that the move is in recognition of its good profits and strong cash flow, as well as to reward its shareholders. The total 70% dividend payout ratio on Patami will start from the second quarter ending February 28, 2021. TheEdgeMarkets.com reported on October 7, 2020 that UOB Kay Hian Research had said a special dividend for Glove was possible as the company moved away from its existing semi-annual payout scheme. Analyst Philip Wong said, should there be any special dividend, it would likely be for the third quarter of FY21. Glove, which was mauled by Glove Bears today, ended trading some 10% lower at RM5.50 for a market capitalization of 44.1 billion ringgit. Experts say the government's move to cancel the Kuala Lumpur-Singapore high-speed rail project and end the line at Johor Bahru instead will still be positive for the construction sector. CGS-CIMB's analyst Sharizan Rosli said in a note that based on his preliminary checks, he expects feasibility studies for the KLHBHSR to be expedited in 2021 and focus on reducing the original civil works cost of between 50 billion ringgit and 55 billion ringgit for 60% to 70% of the total 350 kilometre development cost. That's excluding rolling stock and systems. However, the revised cost will still be sizable, he said, since the distance is only 10% shorter. He believes YTL Corp, IGM Corp and MRCB are still likely major beneficiaries for the project. Meanwhile, Hong Leong Investment Bank Research Head Jeremy Goh says going it alone would provide Malaysia autonomy in terms of project design, specifications, funding, delivery timeline and appointment of consultants and contractors. This could enable easier implementation of proposed cost-cutting measures without the need of bilateral consensus. He said should Putrajaya proceed with a shortened line, there is also the possibility of Singapore constructing a final high-speed link from Johor Bahru at a much later stage, given the potential economic benefits. HSUN says its 75% owned subsidiary HSUN Holdings has inked a development rights agreement with Menteri Besar Inc. Perak for a mixed development with an estimated gross development value of 1.24 billion ringgit. The project will sit on some 475 acres of land in Sungai Kelian Baru in the Perak district of Batang Padang. It will comprise a district health department office, a district and land office, a district council office, a community development department tapah office, and shop offices, landed homes and industrial lots. Under the agreement, MBI Perak will provide the land free from all encumbrances to HSUN. The project is expected to commence in the first quarter of this year and be completed in 15 years. In return, HSUN Holdings will pay MBI Perak an entitlement of 20% of the total GDV of each phase of the development, or 72 million ringgit, whichever is higher over the development period. The development cost of the project is estimated to be 879.9 million ringgit, which HSUN will assume entirely and fund via a combination of internal funds, bank borrowings, or a future fundraising exercise, the exact mix of which is yet to be determined.